why does this pre-IPO market exist at all? Probably first, what helps is a bit of a history lesson. So if you think about the really large public tech companies now, and when they were private, they were only private for a few years. Maybe just a few years later, they decided to list and be a publicly traded company. And then you could buy shares of that company through your brokerage account. That was 30 years ago. Over the last 10 or 15 years, what's happened is that instead of after a few years going public and now being available for you to invest really easily, the company says, well, maybe we'll just keep raising money while we're private and keep growing as a private business. And that has proliferated a lot, starting probably in 2009, 2010, to where companies now wait maybe 10, 11, or 12 years before they go public. So what happens if the company stays private for 12 years? Two things happen. One is there are a bunch of investors that want to invest in this private company as they learn more and more about it. Wow, that's really interesting. I think they're going to grow and I think they're going to be really big. How do I invest? So that's piece one. Piece two is you have a bunch of employees or investors that own shares of the company, right? The investors gave cash to the company in exchange for a piece of the company. And you've also got employees that join the company under the premise of, I'm going to get a salary and I'm also going to get some stock options, AKA like a small stake in the business. So they want to cash out and get some liquidity. So the union of those two needs, right? Somebody that really, really wants liquidity for something illiquid and somebody that really wants to invest in something because they believe it's going to be worth a lot later, is the convergence and the creation of basically the pre-IPO market. So one of the reasons why somebody might want to sell shares while a company's still private is really for diversification, right? Imagine you're an employee at Unicorn Corp. You've worked there for a couple years. You own a bunch of stock options that are worth a lot. You get paid by Unicorn Corp. You're really highly levered to the success or failure of Unicorn Corp. If the company performs poorly and shuts down, you're out of a job and your net worth is pretty much gone to zero. Rather than having $1 million in net worth where all of it's in shares of one company, I can sell half of it and then I can be more diversified and own, stocks and bonds or other private companies. So that's a big reason. Another reason is that an investor in Unicorn Corp may have held that position for 8, 9, 10 years, right? They wrote one of the first checks in. They watched the company do tremendously well. Maybe if they can get some proceeds by selling those shares to somebody, they can reallocate that cash to make investments that are, more in line with what they do, maybe early stage companies and things like that. And for the investor side, the reason why it's really appealing is that if you give a history lesson again, that investor used to get access to the fastest growing tech companies in the public markets. Right? Amazon was a $500 million company in valuation when it went public in 1997. Flip that over to something like Uber or Facebook, companies that went public at north of 50 billion with a B valuations, and you missed out a lot of upside, right? So the real rationale here is that an investor can build up a portfolio of fast-growing tech companies. They ought to look into the private markets to do so. Why else might somebody want to sell their shares? Maybe it's that you want to put a down payment for a house, or you want to pay down student debt, or you want to pay for an engagement ring, or the plan for the growth of your family with the birth of a child, or charitable endeavors, moving to a new town, or you need to help out your family with something, or you want to start investing for college for your kids. These are very common things, and they translate over into what's happening in private markets too. And the pre-IPO market has benefits for these private companies as well. Imagine a private company wants to stay private for another few years, and they've got these great employees. A great way they could continue to retain those employees is by helping them get liquidity for the shares that they own in the company, right? So there's kind of benefits to all three parties involved. There's investors that want to get in, there's shareholders that want liquidity, and there's a company that wants to continue to be a private company for a while. This is a great way for kind of everybody to have their cake and eat it too.